Moving on now to our special segment, Quarter Se Quarter Tak, we'll bring you the earnings expectation from every sector. And today, Ananya joins in to tell us how Q1 FY27 will be for the banking sector. Over to you, Ananya.
So Q1 for the banks, if you see strong credit growth, we can see, but there was a funding gap was the key concern here. Now, system credit grew 19% year on year compared with deposit growth of 13%, pushing the credit to deposit ratio to 82.6%. Now, if you look at the whole sector, small finance banks led loan growth at 25%, while PSU banks saw the widest gap between credit and deposit growth. Now, CASA ratio throughout the sector declined, indicating that incremental funding is becoming more expensive now. Now, the street expects banking sector net interest income to grow around 11% and PAT by about 9%, with private banks likely to outperform the PSU banks. Now, margins remains the biggest swing factor. Most large banks could see a NIM pressure of up to 10 basis points sequentially due to sticky deposit cost and faster growth in lower yielding corporate loans. Now, the most interesting part, the RBI's relaxation of FCNRB and ECB norms should gradually ease funding pressure, with benefits likely becoming visible from Q2 onwards. Now, among PSU banks, SBI remains best placed. Indian Bank looks resilient, while PNB's profit growth is largely base driven. Now, among large private banks, Axis should lead earnings growth. ICICI remains the profitable benchmark, if you see, while HDFC and Kotak will be watched closely for margins in this quarter. Now, mid-sized banks such as Federal Bank, DCB Bank and City Union Bank should deliver stronger growth. Small finance banks remains the fastest growing cohort, led by AU Small Finance Bank, although elevated deposit may keep margins under pressure. Now, overall asset quality throughout the sector remains stable, with MSME, commercial vehicles and agriculture as key watch areas. Now, here the quarter should therefore be steady but margin sensitive, with healthy credit growth and gradual funding relief likely from Q2 onwards.
Got it. All right. Thanks a lot for that. Well, let's welcome on the show Nitin Aggarwal, Head BFSI Research at Motilal Oswal Financial Services, who joins us on the show. Hi, Nitin. Good morning. Always good to have you on the show, Nitin. We've got a couple of quarterly operational updates that have already come in. Now, going by what you have initially seen, could you tell us what are the trends? It appears the private sector credit growth has, outpaced the PSU banks this time around. It appears they're pulling back some market share as well that they lost earlier. So how do you see this play out, and where's the scope for surprises as well as misses, going by the initial operational updates that we've got?
Yeah, hi. Thanks for having me. So clearly, yes, you're right. Private banks have done better in this quarter, and we have seen a fair pickup on both the deposits as well as advances. PSUs, on the other hand, had a very strong run in the last fourth quarter of the last fiscal, and there is some pullback that we have seen on their business data. So some of them have even reported a decline on a sequential basis, and growth also has been fairly marginal versus private banks. And overall, for the year, while we are looking at a 14.5% loan growth for this year, but private banks, we are projecting somewhere closer to 16.5 range. So private banks will continue to do better as we move forward from here.
So Nitin, hi, good morning. And that's the big debate, right? Last 5-year returns for the private bank index, PSU bank index, I mean, if you look at the CAGR, it's starkly different. I mean, big difference. You saying that is about to change?
I think, yes. One reason is also because PSUs will always want to play either for valuations or for earnings growth. And when you look back, the entire rally over the last 4 years was driven by the normalization of valuations, and the earning growth for every single year over the last 4-5 years was running ahead of private banks. But now with ROAs optimized, private banks catching up, and the asset quality in the unsecured segment is also coming back on track. So the private banks' earnings are now going to grow faster than PSUs right from FY27. And while the valuations, given all the derating that we have seen in the entire space, looks fairly comfortable. So there's a strong case.
Yeah, there are still those who push back, saying that maybe there is a bit of a fundamental issue with PSU banks with their lower cost of deposits, etc. Lower cost funding, rather, which they've been very aggressive, and there have been big market share gains in categories like home loans and other areas as well. So that will keep private banks on the back foot. Do you buy into that? How would you respond rather, Nitin?
We have been more selective on PSUs. It's not that we are negative on the space. I think the PSU banks as a whole will continue to do fairly decent when it comes to credit growth or even the profitability. Most banks will sustain 1+ ROA, and that will translate into 16% odd ROE for the sector. So we remain positive on that. But given that private banks relatively look better in terms of earnings growth as well as the valuations that they trade at right now. So which is where our preference is a little more over PSUs as of now.
All right, we've spoken about the credit growth side, but what about the deposit mobilization side? I think you're factoring in a bit of a miss on deposit mobilization, both for SBI as well as ICICI Bank. Tell us, what are you estimating, and could there be a bit of a miss on that front?
Yeah, so as you know, the RBI has now been releasing the fortnightly data, which is aligned to the quarter end. So this is the first time that we have done this business update reconciliation, as almost 70% of the banks have already reported the business update as per the outstanding banking credit and deposits. And ICICI and SBI are the other two large banks which are yet to report. So basis the reconciliation, we believe there is a small chance, or fair chance rather, I will say, that SBI may miss the deposit growth estimate that we have put out. While it does not have any kind of respect to how the full year number pans out, but for this quarter at least, I think there is a possibility of a slight miss to our numbers on the deposit growth from SBI. And this is something that we have seen across PSU banks, wherein the business numbers have been a tad softer than what we projected.
Nitin, just to come back, in terms of, let's just look at some segments, right? Housing finance as a space, right? Again, I mean, the view is that maybe once again that it should come back into focus. Just your thoughts here.
Yes, we are seeing some recovery, at least on a selective basis. And say, for example, if you look at the private banks, ICICI Bank has shown some pickup on the mortgage lending growth last quarter, and we're expecting some further recovery this time as well. And but overall, there is a lot of competition, which is where the yields in this space continues to remain under pressure. PSU banks, about the credit growth that you touched upon, they are competing aggressively, not just in corporate lending or mortgages, but that competition is now getting extended to SME or even the vehicle finance. And which is where I think from this quarter, what we are watching out more is on the margin as to how the trajectory is over there, and not the asset quality as much. So I think margin is the most important variable that we are watching at from this quarter perspective.
Okay. What about for those who have exposure? But my question actually is on the segment microfinance, Nitin. What's your view there?
I think the segment, after having seen an extended painful cycle, is now seeing the normalization. Most lenders are very close to the normalized run rate on the collection efficiencies. And while 1Q is always a seasonally lean quarter, we expect trends to pick up, and over the year we are expecting a double-digit growth, maybe somewhere between 10 to 15% growth for the industry. So most lenders should see a comeback on their growth and profitability in this year.
Got that. Just a couple of other things. There is this RBI proposal for a one-time nod for mutual funds, insurers, pension funds, on them being able to acquire stakes in banks. I don't know if you've gone through it. Is it important, and any implications to your mind?
I will have to look at that and see through as to what all repercussions it may have.
I see. So RBI is proposing a one-time approval for subsequent major stake acquisitions in the same bank. So prior RBI approval for initial major stake acquisition is needed, but for subsequent stake increases, I think they're easing the approval process in some way. So we'll have to kind of look at this in some more detail. Nitin, we'll leave it there. Thank you very much for joining us. Good speaking with you. Appreciate your time here on CNBC TV18.